next part of the video of my full strategy for all you Discord members that are in my group. This video is for you. So the last video we talked about market structure, and you shouldn't be looking for any entries or trading at all until you've mastered, or not mastered, but have gained a good amount of knowledge of market structure to be confident in, okay? And so for the, like I said, I talked about the time frames for market structure in the last video. Again, the first step you want to do to look for trades, guys, and how I look for trades is, like I said, first always comes market structure. So this market structure is on the 40-minute time frame, the 45-minute to be exact. I like trading on the 45-minute. I mean, I like looking for market structure on the 45-minute. That's my favorite time frame. And then I look for structure on the 1 hour, the 30-minute, the 15-minute. Okay. Like I just wanted to go over that again. So after you found your structure, so for mine is on the 45-minute, I zoomed all the way out to make sure I didn't miss anything. And as you can see, even when price is zoomed all the way out, it still remains it's obviously and significantly the structure that is taking place here. And the reason why I zoom all the way out is to make sure there's nothing I'm missing, to make sure it's indeed going downward. Okay, so now that we zoomed out, we can zoom back in. Okay, so now we found our structure, okay? So this is a trade that I took today, but I want to first talk to you about this. So we found our structure, okay? So now that we found our structure, what we're going to do is we're going to erase, actually we're not going to erase it. The thing you want to do is, before we're getting into any trade, we want to understand what we're looking for at all. Okay, so now that we're in down structure, what are our two types of entries that we talk about in the group? So those entries are what? They are POIs, okay? And what does POI stand for? What does POI stand for? POI stands for point of interest. And the reason I call it POI is because these are areas that we want to trade in. POIs are order blocks, slash, you can also call them supply and demand zones for us in our group, and imbalance gaps. So the two types of trades that we are only looking for, guys, the only types of setups are order block setups and imbalance gap setup. And if you've studied in the group, can you guess what this setup is that I took this morning? Why did it just delete my fucking box? Alright, I'm gonna have to draw it again. So this setup right here, you guys can rewind the video and pause that. This setup right here is what? Is it an imbalance or is it an order block? Well, technically it's both, because on this time frame, on the 15-minute chart, this is an imbalance, but on the 45-minute, this is more of an order block, okay? Now, order blocks, like I said, are large sums of money being injected into the market by the big institutions, okay? So that meaning the banks and the hedge funds and things like that, specifically in the Forex market. These target areas that you're looking at on the screen that I'm pointing to, these target areas now become points of interest for entries, okay? So we just talked about points of interest. In these order blocks, 50% of the order block usually gets filled, okay? So 50% of this block, and 50% of what? 50% of the small candle in the block. So if you look at the block, the black candle in this order block is bigger than the white candle. It's engulfing the white candle because we're bearish, okay? So what we're going to do is we're going to mark up 50% of the small candle in this order block. So to do that, you need a tool called the GAN box tool on TradingView. It's GANNBOX, the GAN box tool. And this tool allows you to go like this. So you mark up the bottom of the small block in the order block, the bottom, then drag it to the top of the order block of the small candle, not the black engulfing candle, the small white candle. Now that you have that, we've divided it into two halves, because look, if you look in the center of what I just drew, you can see a 0.5 line, right? So within that 0.5 line, you want to mark that up, put your mouse on that middle line, tap it, and then you'll see a line, and then you want to drag it across your screen. Now you want to label that line 50% order block, because like I said, 50% usually gets filled by institutions in these order blocks because we trade the banks and institutions. That's why my trade went to profit this morning, because it was an institutional trade. That's why I went straight down. So after you see the order block, you want to see unhealthy price action. So we see the black candle engulfing the white candle, and after it, we see a little bit of retail trying to buy up, right? And then we see unhealthy price action. Okay, so order blocks followed by unhealthy price action are what you want to look for. And order blocks followed by unhealthy price action are what you want to look for. And they tend to be at the top or bottom of the range after you identify your structure. So we're in down structure. Before I even got in this trade, I had a low here. I had a current low. Sorry, let me get something else, guys. I had a current low here. Okay, so hold on. I had a current low here, and then I had a previous low, right? I had a previous low, and I had a high here and a previous high. So we are in down structure. And so like I said, our entry was at the top of the range, because when you're selling, look at our current range. Our current range is our current high and low with the black lines. Okay, so within that current price range, if we're selling, would you rather sell at the bottom of the range where price is already down, or would you rather sell at the top of the range? Probably at the top, right? And the reason at the top, because the top of the range is what? Is our premium side of the range. And the bottom of the range is called the discount. Because when you buy things in the market, you would rather buy things, and institutional investors buy things at discount. Smart money will sell things at premium. So premium prices is when the market is up, okay? So that's why people have FOMO. So if you look here and we see the market, you see all these white candles going upwards and going upwards. Some people bought at the top because they thought, oh, the market is going up. Look at all those white candles going up. And that's why the smart money likes to sell at the top part of the range, because they can take all the money from the less knowledgeable, the retail. So we always sell at the top part of the range within our current structure. And when we're looking to buy trades, we would buy at the bottom, which is called the discount. And so if we take our Ganbox tool like I had before on the order block, and we mark up the low from our low point to our high point, our current low and current high, you can see the 0.5 line, that green line in the middle of the range, represents the equilibrium. And that's, if you want to know what that is, that's in the group. So in between this range, when you're marking your structure, after you've marked structure, get your Ganbox tool and mark up the current high and current low using the Ganbox tool, and then look for POIs at the top part of this range here. And what I mean by that is the top part of the green line here. And I have to say it over and over again so you guys can learn and understand. So the top part is where you want to look for your POIs. And what do we say our POIs were? Order blocks and imbalance, because all we trade is order blocks and imbalance. Okay? So now that you know that, so this trade right here is considered both an order block and imbalance, because intentionally I've entered this trade based on the 15-minute as an imbalance, okay? And so imbalance is a POI just like order blocks. It occurs at the top or bottom of the range, sometimes the middle of the range, but mostly at the top or bottom, and it has unhealthy price action. So this imbalance previously that I took the trade from was created by news and institutions and smart money. And so that's why this is considered a smart money strategy, because we're trading based off the volatility and the news, because that's what we do in our strategy. So again, oh shit, I just opened something, guys, on my computer. Again, the first step after, like in the previous video, after you learn market structure, now you want to start looking for tradable setups. So that is your order blocks and your imbalances. And these trades will usually happen at the top or bottom of the range. If you're buying, you have to look for order blocks and imbalances at the top of the range, okay? So if you're buying, you want to look for order blocks and imbalances at the bottom of the range, which is your discount area under the green line. And if you're selling, you want to look for your order blocks and imbalances on the top of the range above your green line in the premium area. And you can pause the video, rewatch this many times. It's that simple. There's nothing else. So once you found your let's say you found an imbalance, right? Let's say you marked up structure like me, down structure, bearish structure, and you found an imbalance at the top part of the range. So once you do that, you can take your gray box and mark it up just like I've had, and then you can put the entry line, you can put your stop loss line at the end of the actual block. So once you've highlighted your imbalance, so the imbalance is the gap where price has to be filled between the last and the next candle. So this box here is the real imbalance is here between the last candle, which is this wick, and this candle. So this is the actual gap, okay? But we like to go ahead and mark this up here. So this was our imbalance. But for me, I usually would like to put it up a little bit more, knowing that this could be my stop loss, and also because we had the 45-minute order block. But here, I just saw this, and as an imbalance, I like to mark up the whole candle. So the stop loss would be the end of the candle, not the wick. The stop loss is at the candle of that imbalance, because this candle is what the balance is. Okay, and once you've done that, you enter here, you would enter at that entry line, and then your stop loss will be there, and your take profits, we will talk about in another video, but for now, the take profits are always going to be your double bottoms and double tops and trend lines. And since here we didn't really have much double bottoms and double tops, I just took profit at the next, because that's considered liquidity also, the next low. I took profit at the next low. So your take profits can be double bottoms, double tops, trend lines from retailers, and just the next low itself, okay? And so sometimes, guys, when you're trading, you'll find imbalances in order blocks, and like if you got the Gann box tool, you will find imbalances in order blocks at the center of that 0.5 line, at the center. So you may find trade setups neither at the bottom or top of the range. The center is okay. That's fine if you find them at the center, because that's a balance in price. So sometimes you'll find imbalance or order blocks at the center of this line, and you'll take trades at the center of the range, okay? But yeah, guys, this is just a quick video on POIs, or on our order blocks and our imbalances. If we go to the group here, and we go to our chart examples, you can find plenty of examples of imbalance and order blocks here, like this image here, imbalance. Sorry, this one's a foggy image. Like this image here. The first one is white imbalance. The second one is black imbalance. Bullish imbalance, bearish imbalance. Some more imbalance here. Look at this entry, guys. Stop loss was above the high of this imbalance. That gray rectangle, that's our actual imbalance. We had unhealthy price action after our imbalance, going downward. We had that downward impulse. That's our unhealthy price action. And then the take profit was at our equal lows. Okay? It's really that simple. And then so now in terms of imbalance rules, if you go to the Learn section in the group, you can look at this. So when you first start trading, you can start trading what we call imbalances. So that's what we start when you're beginning in my group. In order to get real institutional smart balance, you need to follow these rules to find imbalances. So you need your market structure, like we went over. Okay, so that was this. The black lines, that was our market structure. Okay, so we have that. Top or bottom of the range, premium or discount price. We had an imbalance at the top part of the range. Okay, we had an imbalance at the top part of the range in the premium area of our current range, which is the premium is just the top part of the range, and the discount is the bottom part of your current price range. Our current price range is our current high and low, and the premium is our current high. I mean, premium is the top part of the range. And when you're selling, it's the top part of the range. When you're buying and you have up structure, the premium is still the premium part is the you know basically what I'm trying to say. So when you're sorry, I'm just scrambled because I'm thinking about a lot of things at once. So we had our imbalance area at the top or bottom of the range at the premium area. Next step would be the next rule you would need, the last rule, unhealthy price action. So does our imbalance have unhealthy price action? Yes. Why? Because here, after we had the gray box, our imbalance caused a break of structure here. If you actually pay attention, our break of structure was here. Those black candles broke this previous section with the blue line. That was unhealthy price action, because healthy price action goes up, down, down, up. This was unhealthy because we just went straight down, okay? So this, you need to use these rules every time you look, you identify an imbalance. So once you go, guys, go and identify imbalances and order blocks in TradingView after you found your market structure. And then once you find imbalances, if you need help, just go ahead and screenshot the imbalances and then go to Tribe Chat. Go to Tribe Chat. And if you want, you can put it in group photos too. But go to either Tribe Chat or group photos and then just upload your photo of your trade setup or your imbalance or order block in the group, and I'll look at it for you and tell you what you're missing if you're missing anything. But before the 3 steps: market structure, then look for imbalance or order blocks, which are your POIs, and then look for then look at this. Then come into Discord or write this down in the journal and look up the imbalance rules. So like we just read. Okay? You need those. You need to know these rules and write these rules down so you can be able to take the right trade setups. Okay, guys. So yeah, that's pretty much all I'm going to do in this for today's video. I hope this helps you a lot. If you want to know more about order blocks and imbalance, like I said again, go to the Learn section in the group, and you click on POI 5 and POI. This will show you the entry rules for order blocks. Like for order blocks, the top of the range, 80% of small candle. You go to POI 5 and read this. I have the exact time frames for structure and the rules for imbalances and what an imbalance is. Just go in here and then also go to chart examples in the Discord and scroll down and then click imbalance, and you'll see tons of chart examples of imbalances. Then click order blocks. Then you'll see tons of examples on order blocks, okay? And these examples, these are visual examples that you can see what an order block looks like. So this, in this picture, this is a bullish order block instead of a bearish one. So if I was looking to trade this I had previous structure. So I had bullish structure, I had up structure, I had higher highs, higher lows, and so this this order block broke this liquidity here, which was that trend line that went against my bias of going up because we had up structure. We had bullish structure, and so in bullish structure, I would after this went, I waited for price to come back down and enter this order block. And where did I enter at? 50% of the candle. So like I said, go back to AutoCAD. We go to the 45-minute. Take our Gambox tool out and take our line here and mark our low to the high of the smaller candle. In the middle part of the order block, the middle of the order block and of the smallest candle, that's where you want to mark the smallest candle of the order block, not the bigger candle. You don't want to mark this as the order block and mark this whole order block. You want to mark the smaller part, the smaller candle in the block, because it's a block made of 2 candles. So highlight the smaller one and then draw a line in between at the 0.5 where it says 0.5. Draw a line there and enter there. Okay, those are your entries. So that's what I did here. And the same thing with this screenshot. Have another order block. Our order block was right here where I entered. You see that wick? You see how my wick touched that entry? Well, technically I entered here off that imbalance, but you still see how I had enough stop loss room, because sometimes you'll see one that looks like an imbalance and an order block, but I had enough stop loss room to be to risk all of it. So I entered here earlier in case it just reacted off of this imbalance, and I also gave it enough room to react off of that order block. So you saw that tap. It just tapped and it went. And look at another example of the order blocks. Here's technically another order block. This one isn't a perfect one, because this one doesn't have a black engulfing candle. So this one, I don't even know why I marked this one here. I think it was an imbalance on a smaller time frame. But let's look at another one. Here's a perfect order block. 2 big giant candles, minimal wick, engulfing black candle going downward for sell structure when you're selling, bearish structure, and a line, that line at the middle part of the white candle. Okay? Because order blocks usually get filled at 50%. Here's another one. Here's an order block on the daily time frame. 50% of the order block got filled here of the smaller candle. You see how the wick just tapped and went? And it's the same thing when you guys are trading with imbalances. it's basically the same, but just slightly different. So the imbalance here in this trading in this screenshot of the second trade, I entered right here in the middle of this imbalance right here. Okay. And here's another imbalance here. So you can see in this screenshot that we have two highs that are descending. So we have two current highs that are lower and two lower lows that are lower. So this would be what? Bear structure or down structure, you can call it. And so I took a trade at the premium part of this range, which is the top part of the range, and I entered right here because this was a 15-minute imbalance gap that was at the top of the range, and yeah, and then I took profit at the next low. So yeah, guys, if you want more examples, just scroll here, and then you can also go to in the Discord, you can scroll up to my weekly setups, and then just compare your trades to my trades and just look at how I'm trading and how I mark up things. Like this trade here. Here's another imbalance. Here's back when I did all this. Here's another imbalance area. And sometimes you won't get exact fills. So if you can afford the stop loss, you can actually have enter a little bit earlier than the actual wick. So here's another imbalance on NAS 100. You see that yellow box? That yellow box is where that imbalance gap was. So the imbalance is the wick is from wick to wick. The gap is between this yellow box and that next low of the next movement upward. Okay, so if you have any more questions or if you don't understand how I'm explaining it, just look at my photos more and just message me personally, and then I will help you. But I hope this video helped you guys. And yeah, remember, first comes your market structure, then comes your POIs, which are your order blocks and imbalances. And you want to identify them at the top, middle, or bottom of the range. And so just write down all of what I said today. I hope you guys found this useful, and then I'll do the next video tomorrow. Peace.